Well, for the moment, we are off to a good start. It's not turning out to be a great start. But 2018, in a sense, has not been a great year for the broader market. The market headlines have been rather nasty, from a bank scam to crunch in NBFCs to problems in LNFS and extreme volatility in global markets. So between heartening surges in some large cap stocks, we've had some heart-stopping plunges in some of the mid cap stocks. But now, are we reaching that point where one should really not get obsessed with macros and large cap stocks? 2013 also we saw a similar factor at play when macro concerns were high and Nifty managed to outperform, but once the dust settled down, which it already has because crude is down, interest rates are unlikely to move higher, then we saw a resurgence in mid and small cap stocks. So the seeds of a smart mid-cap rally were actually sown in the 2013 crisis or 2013 macro crisis. Have the seeds of a 2019 and 20 mid-cap rally already been sown in this entire macro crisis? So let's discuss that and all that and much more with Porinju Veliyath, Managing Director and Portfolio Manager with Equity Intelligence. Porinju, fantastic to have you back and thank you for joining us. Now, for a mid-cap or a small-cap stock picker, it's been a tough year. It's been a brutal year. The pain has been nothing short of excruciating. But do you think now there is a telltale sign that 2019 will not only be a better year, but will be a great year for individual stock pickers?
Happy New Year to all the viewers of IT Now, Nikunj. I think it's a very, very important question what you're asking. People, a lot of people now feels they're mistaken that, they got trapped in mid caps and small caps. It's a time to move to the blue chip companies, the large caps. I think it may be a double mistake if somebody think of doing that in general. There can be exceptions in both large cap and the mid and small caps. 2019, I strongly believe that will be a year for the mid cap and small caps because of what happened in 2018. That's the basic reason. The valuations have come to reasonable levels, and some of them have come to very, very attractive levels. And that is the main point I would like to make. People already invested in the mid and small caps. They have continued to hold it. And they're staring at a huge drawdown. In general, there are smart people whose stocks haven't gone down, maybe small exceptions. But in general, for an average investor in small and mid caps, they are sitting on a huge drawdown. And they are advised, perhaps, some people, they sound very intelligent at this point of time, and they say, don't buy small and mid caps, you buy only the large blue chip. They sound intelligent because of what is happening in the market. But it can be a wrong advice if given at the wrong time. So now it's a wrong time for that kind of an advice. You have to be consistent. If you are a mid and small cap investor and have been creating wealth in the last many years, 5 years or 10 or 20 years, be consistent. I'm telling you, India still has a huge opportunity for picking the emerging companies, small and mid caps, and creating multi-baggers, which may not be the case today with the Nifty and Sensex. The Nifty and Sensex is not as cheap as maybe in 2013 or earlier. It is not very expensive too, looking at the macro environment we are going through. Luckily India has recently, we are going through a huge, reverse trend in the macro headwinds. We have got such low crude price and rupee is getting stronger. A lot of good things are also happening in the economy. Most importantly, I would say what people have to watch, the reforms done in the past, the major historical reforms, the benefits will start accruing in many aspects. Number one will be the tax compliance. We are going to see, already we are doing well, 16-17% tax, higher tax we are collecting. And I think in the last 5 years, the tax has almost doubled. This is not a small thing. Our economy is growing at 6-7%, and the tax collection growing at 16-17%. It's amazing. And trust me, we have got a scope. If our income tax department and GST being fine-tuned, now data is available everywhere. Now IT can have access to GST data. IT has got access to all BSE, NSE data on a daily basis. Imagine the kind of non-compliance will be discouraged. And I won't be surprised, our tax collection growing at 20 to 25% next few years.
Right.
And that is very important for the economy.
Yes, indeed it is. Porinju, but I like your latest tweet wherein you're saying, look at the 52-week highs in today's price. It's unbelievable. And you say with conviction that wait for next December and then check the 52-week lows and the prevailing prices. And you say that, believe me, it would be equally unbelievable and applies only to non-index stocks and sound stocks. So clearly the time has come to even separate the men from the boys when it comes to small and mid caps. And I understand that's where your conviction lies. But where within small and mid caps are you hunting right now?
It's a bottom-up approach, most suitable for 2019, I believe, Aisha. Of course, bottom-up approach is something very common and it's very highly appreciated. It has been working all the way, all the years, all the decades. But this 2019 has got a very special relevance. More than getting into a particular segment or an industry, I'm telling you this will be the best way to look at that, because there was a huge volatility in the 3,000 stocks other than the top 15, 20 blue chips in the Nifty or kind of thing. So I believe, that it's an ideal situation for having a very strict adherence to a bottom-up approach. There are companies, and we have all seen, only the small caps have grown to mid caps and mid caps have grown to, the large caps. Now, HDFC Bank is not one particular day as a large cap and it's growing at 20% CAGR. It was only 500 crores market cap 2 decades ago. And now it's, 5-6 lakh crores of market cap. So see, that's how, every large cap was a small cap or a mid cap at some point of time. Some of them were micro cap. Infosys was a micro cap in 1993 when I bought the stock first. So it's not that, don't buy small cap, don't buy, people use some bad words also to sound intelligent. So, and there are people to buy that ideology. Or see, nothing wrong. Everybody is different in investing. Now, some people invest only in the blue chip proven companies, very large companies, and they are at ease. And that's also a wonderful way to invest in Indian market. And they are making wonderful CAGR, maybe 10, 15 CAGR, and very safe. They don't have much volatility. That is also one style of investing. But it's not the only style of investing. There are people who created, 25, 30% CAGR, 35% CAGR, and that has happened not by blue chip investing. That is for a long period of time. That has happened because of small and mid cap investing in a structure of Indian economy. There is a lot of scope for such mid cap businesses, medium type companies to grow big and create 25-30% CAGR, and we still have it, but it is not in plenty. When you look back in 2013, we had such stories of very attractive valuations in mid and small caps in plenty. I think
Sure.
it has come down.
Porinju, I'm sticking my neck out here and venturing to talk individual stocks. You had bet on the likes of HSIL, GSFC, if I'm not mistaken. Are there any other stock bets for this year that you think that you will have a lot of conviction in? Or if you can't share stocks, then tell us some of the sectors as well. You spoke about mid-cap IT. So give us a sense as to what you're looking at for the next year in terms of cherry picking.
I don't want to give any individual names at this point of time, but it's true that I talked about some mid-cap IT companies. They are transforming into digital business, not just rupee trade or IT services. India has a lot of companies managed by very smart people who are innovating, who are reinventing. So that space in mid-cap IT, I think there are not many, maybe 5-6 companies, and we also started buying a couple of them in the last 5-6 months. So I don't want to tell the names. So I think investors are smart enough today to identify such quality names in the mid-cap IT. Another sector I feel, it's a very totally not fancied and beaten down, and nobody talking at this point of time is cement sector. I feel two aspects for this industry. First of all, they are beaten down very badly, especially the mid-cap cement companies. And they are available at 45 and 50 kind of dollars per ton EV, enterprise value. That's really cheap, like 2013, I would say, in that particular segment, cement stocks. And now the GST is at the high bracket of 28%. There are clear indications that it will be brought down very soon. So I think at this 50 to 60 kind of valuations, dollars per ton valuation, it looks very safe, and cement will be consumed in India. And I think we are heading for a, after the demonetization, there was some lack of construction activities. It is again picking up, and it will go much higher. And, today replacement cost of cement per ton, the EV is something like more than $100. And even the blue chip companies in cement are available at $80, $90. So some well-managed mid-cap cement companies at $50, $60 valuation, I think that will be very safe bet for 2019.
That's that on cement, Porinju. But I want to talk about your high conviction ideas with start of 2018 you were bullish on, like an HSIL, like a Kaya or a Lead Electronics. Any of the stocks wherein you are confident of rolling your positions over to 2019 because you believe that irrespective of the volatility that the year gone by showed, these are stories that you bet on fundamentally for the next 2 to 3 years?
Now, Kaya and HSIL, we are holding it with the high conviction, especially at these prices. It looks really good. Some of our largest holding. In fact, Kaya is the largest holding. I feel that the promoters have given an indication, that they are going more of products. Now, of their service business, the cure and care business is doing well. It's stabilized. It has become profitable after a long 14 years of time. And they are going to grow bigger by focusing on the product sales and brand. So that can be, I think, that is not reflecting in today's valuation of some 800, 900 crores of market cap and a clean balance sheet company, a very high quality management of Marico. I feel we are very confident and we are holding on to the stocks. And HSIL also, it has been beaten down because of some challenge in the earnings in the last couple of years. Again, that's a leader in the segment in some of the niche areas. And Hindware, it's a big brand nationally with high distribution reach. I feel HSIL also at this price is very good. We are holding these stocks in the portfolio management. I want to disclose that. And the lead and all, you told there was many mistakes happened. Not only mistakes, I bet I was talking last time. See, I was betting on the improvement on corporate management, the corporate governance. But many managements, they continue to remain chore. They find loopholes to siphon off money. So Lily is one of that stock, I believe. The way they got 1,500 crores by selling the consumer division to Havells. And today the stock is only 250 crores market cap. And they have taken more money than the market cap into their personal companies openly. And informally, I don't know how much money they have siphoned out. So these kind of things are still legal in India. That is very sad. That is why I like Modi. Modi's plan of action, bring down all these corrupt people and the opportunity to do corruption. And it will be a long process. 5 years we cannot do it. We have been nurturing this culture for the last 70 years of, chori, siphoning off, all those kind of things. Not only by individuals and families, corporates are doing it. Tax compliance is a big issue. So we need a huge structural change. That was the only reason I have been supporting the action of this government, the wonderful reforms against black money and, for making the economy much better. See the GST, IBC kind of reforms in this country, it is forever. Nobody can reverse this. So that is one good thing. Investors need not really worry about the coming elections. I'm telling you, let anybody
Another
come.
place where I'll go with Porinju, there are two factors which drive small and mid-cap stocks. One is attractive valuation, then second is sentiment and liquidity. So what is looking attractive on paper could be one side of the equation, which is the right-hand side of the equation, that is valuations. But the other side of the equation is liquidity and sentiment, and unfortunately that is broken. So the believers of the small and mid-cap stocks today are just not there. I mean, at the beginning of the year, everybody had this insane belief that nothing could go wrong for small and mid-cap stocks. Money was pouring in. Now the view is that nothing will ever go right for mid and small cap stocks. So when do you think the sentiment will change? Because if sentiment will not change, buyers and liquidity will not make a comeback.
See, when liquidity and sentiment comes back, these stocks will be worth selling, not buying. So you should buy it much before that. When liquidity and sentiment is low, you get stocks at say 100 rupee. And when you find liquidity and sentiment is very good on this stock, it will be 300 rupees. This is typical to small and mid caps. See, if you see in 2013, people were not feel like buying stocks. If you remember, I was extremely bullish on some of those companies at 5 and 6 P's. And I still, in spite of the big drawdown, many of the stocks I recommended in 2013 are 5 times, 10 times, and KRBL kind of stocks is 20, 30 times. So that is that you should buy mid cap and small caps with a conviction and as a great idea. If you believe in that business model and its growth, buy it when the sentiment is low, and if the liquidity is low, it is an added advantage. You can buy it, Aram say, there won't be FIS and all will come and buy it. So for individual investors, this is very positive that liquidity is low, sentiment is low.
As soon as we tweeted about you coming on the show, we've been being bombarded with requests for stock picks, sector outlook, etc. But I won't delve into that. Let's talk about, your view on the elections and what your expectation is in terms of, high conviction growth areas, because you're fairly optimistic on the macros as well. You're saying that irrespective as well as to who comes into power, the India growth story remains intact, correct?
Yes. So coming to the elections and politics, which is going to be very important for investors in 2019, perhaps. See, it has to be seen in the light of the huge reforms India witnessed in the last few years, starting with demonetization, the GST, the IBC and CLT, all those kind of things. See, now anybody will agree there were flaws in implementing these reforms. We have got a limitation. India is such a huge, diverse country and economy. It's not an easy task to implement a GST. That is why we took so many decades after thinking of implementing it. So once, we have to do it with a lot of imperfections. You cannot keep a perfect system and implement GST. Nobody can do it. It's only, this corrupt media propagating and they're giving a narration and against the establishment. I don't believe. And there are people to buy those arguments. Anyway, now, this has to be seen as an attempt by the government to reduce black money, to bring in formal economy, to create a base for a higher growth of economy so that India can reduce the poverty level. That is the ultimate aim we all love to have. We have got 500,000 Indians in poverty because of corruption, because of mismanagement of the economy by politicians. So when we try to change from that rotten culture of 60, 70 years, there will be opposition. And if the media also in that, they also stay with the anti-national forces and try to give a narration that this is killing your country, you have a pain now. See, there is no long-term gain without short-term pain. Now, the problem is that in India, every citizen wants today. They want to get something personally. And if they are thrown biscuits, they will vote for them. That's a very, very dangerous situation for our economy. Empowering people, empowering the poor people to make their earnings. It will never happen if you go on throwing them biscuits. So this is a dangerous trend in this country. I hope if the current regime continues and our reforms are being followed up, we are heading for 10% growth in our economy, GDP. So the people who are knowledgeable plus, good citizens, they will vote for NDA. I also do not have any political affiliation. I am not a BJP guy. I don't have any political affiliation. I'm just talking from the from a national perspective. For our economy, what is good? That is the only way for reducing poverty. By throwing biscuits, India can never bring down our poverty levels.
Right, Porinju. It's great having you with us, giving us a sense of what the outlook is for the next year and some of your high conviction ideas. Wishing you a very happy new year from Team ET Now.
Thank you.